It's 4 a.m. in New York, 9 in London, and 5 in the afternoon here. Live from Seoul, I'm Moon Gun-young in for Devin Whiting today. Now we begin with the latest from the nation's top office. In a sweeping reshuffle, South Korean President Moon Jae-in on this Friday replaced the Prime Minister and 6 other cabinet members largely in a bid to revive his policy agenda as well as his party following the recent local election defeats. Our Hong Yu reports.
President Moon Jae-in on Friday appointed former Minister of the Interior and Safety Kim Boo-kyum as his successor to Chung Se-kyun as the nation's next prime minister. Kim, a 4-term lawmaker, overcame regionalism by being elected in the Daegu region for the 20th National Assembly, a well-known conservative region. Prime Minister Chung offered his resignation and he's expected to run as a candidate in the next presidential election. The top office said that Kim is a politician who has devoted himself to social reform, national reconciliation, and overcoming regionalism.
He's the right person to address the desperate needs of the people shown in the last election, including overcoming COVID-19, eradicating real estate corruption, boosting economic recovery, and the stabilization of people's livelihoods.
President Moon also nominated 5 new ministers, those for the land, trade, science, labor, and fisheries ministries. This cabinet reshuffle comes in response to the ruling Democratic Party having lost in the mayoral by-elections and is aimed at creating new momentum for the president's leadership. Former Minister of the Office of Government Policy Coordination, Do Hyung-wook, has been nominated to lead real estate policies at the Land Ministry. Moon Sung-wook, the current second Vice Minister of Government Policy Coordination, has been nominated for Trade Minister, and Im Hae-soo, current Chairperson of National Research Council of Science and Technology, as Science Minister. Also, An Kyung-duk has been nominated as the Minister of Labor and Park Jun-young as Minister of Oceans and Fisheries. All will begin their new roles after undergoing confirmation hearings at the National Assembly. On the same day, the Moon administration also announced changes at the top office. The president appointed former ruling Democratic Party lawmaker Lee Chul-hee as Senior Presidential Secretary for Political Affairs, and Lee Tae-han, an audit official at the National Health Insurance Service, as Senior Secretary for Social Policy. The Blue House also appointed a new spokesperson, Park Young-mi, who has been the Presidential Secretary for Education. The top office also made a new post in charge of Disease Control and Prevention Affairs, Kim Mo-ran, Professor of Preventive Medicine at the National Cancer Center. Hong Yu, Arirang News.
Innovative growth in the post-pandemic era is what South Korea has set its eyes on. The government is looking at providing a tax cut for research and development into memory chips, and it's upping its investment in future car technology. Our Ji-young has the details.
The South Korean government is considering providing tax deductions for businesses developing memory semiconductors. Finance Minister Hong Nam-gi revealed the move on Friday during a meeting with corporate leaders on spurring innovative growth, saying that this is to encourage investment into semiconductor research and development. He also said the government will focus on fostering the so-called Big Three industries of system chips, biohealth, and future cars.
As can be seen from the White House summit with corporate leaders addressing the global shortage of semiconductors and LG and SK settlement in their battery dispute, batteries and the semiconductors are the key infrastructure for the fourth industrial revolution. Countries are going all out to take the lead in the market and the secure supplies.
He said that the country will continue to increase investment until 2025 with the aim of being the world leader in the emerging market. South Korea will also invest 37% more than it did last year on the development of future cars. He said the government will invest nearly $330 million this year on R&D for eco-friendly future vehicles. The focus will be on batteries, hydrogen fuel cells, and self-driving networks. The government is also considering extending support for regions with industries that are at risk, including Ulsan, Geoje, and Mokpo. Ji-young, Arirang News.
The world's 2 largest economies, the U.S. and China, are showing signs of robust recovery. U.S. stocks have hit record highs fueled by promising economic indicators, including a jump in retail sales, and China's recovery quickened sharply in the first quarter from last year's deep COVID-19 slump, propelled by stronger demand at home and abroad, as well as continued government support for smaller firms. Seung-kyung with more.
The U.S., the world's largest economy, is on the path to economic recovery, with the Dow and S&P 500 index both hitting record highs on Thursday local time. The Dow Jones Industrial Average gained 0.9%, leading to the blue chip benchmark crossing the 34,000 mark for the first time. Meanwhile, the S&P 500 hit an all-time high, closing at 4,170.42. Rosy economy indicators have largely contributed to the rise. According to the Commerce Department, retail sales surged by around 10% in March compared to the previous month, with additional stimulus packages encouraging consumer spending. Meanwhile, the Labor Department reported that there have been fewer people filing for unemployment. New jobless claims for the week ending April 10th stood at 576,000, similar to that of March last year, the early days of COVID-19 pandemic. And economic rebound from the coronavirus pandemic is being witnessed in China as well. China's National Bureau of Statistics said on Friday that its economy grew over 18% in the first quarter of 2021 compared to the previous year. The figure marks the strongest quarterly on-year growth since 1992, when China started compiling data. The surge was mainly due to a low base effect as China locked down large parts of its economy in early 2020 to contain the virus. In the first quarter of last year, China's economy contracted 6.8%. An increase in household consumption was another factor. Retail sales rose 34% in March compared to a year before, surpassing market expectation of 28%. 서은경, 아리랑 뉴스.
And time now for an in-depth look at markets around the world. And for that, I'm joined on the line by Daniel Yu, Global Strategist at Yuanta Securities. Hi, Daniel. Thank you so much for joining us today.
Yes, good afternoon.
Now, oil extended its climb out of a month-long trading range with further signs of an accelerating rebound taking shape in the United States. Gold also rose to the highest since late February, putting the metal on course for a second straight weekly gain. Let's talk about these two commodities and your forecast for the near term.
Right, as you said, the oil futures were trading at the highest level in a month, with the WTI crude climbing above $63 a barrel and Brent topping over $67 a barrel. As the International Energy Agency and Organization of Petroleum Export Countries raised its expectation for 2021 oil demand forecast. Clearly, the economic recovery that is happening on a global scale is expected to have a bigger demand for oil, and that seems to be the key booster for the oil price moving up higher. Also, gold prices continue to show some rise, and it is trading at $1,760 per ounce on Friday, which is near 7-week high. Clearly, this is because of the weaker dollars that we've seen in the past, and the treasury yield that we have saw falling down to quite a bit of a low level that we haven't seen in the past month or so, at below 1.6%. Right now, it's trading at around 1.55. The benefit of holding this safe haven seems to be continue to rise because there's continuation of concern about the COVID vaccine, and the cases of new additional patients are definitely rising on a global scale. So therefore, people still continue to have some interest towards the safe haven assets, which is the gold, despite there is continuation of upbeat retail sales numbers and economic recovery that we're seeing. And we are expecting oil price to stabilize in the future and gold prices also to stabilize in the future as the direction of the currency will remain where it is at the current point in time.
Right, so we expect those two commodities to stabilize in the near-term future. Meanwhile, Wall Street notched more milestones overnight as a market-wide rally pushed the S&P 500 to an all-time high, and the Dow Jones Industrial crossed above the 34,000 mark for the very first time. Are we seeing optimism and expectations of a strong economic recovery in investor sentiment?
Yes, now the Dow Jones added 0.9% yesterday. S&P also gained 1.1%, and NASDAQ was up 1.3%. And also even the small caps 2,000, the Russell 2000, gained about 0.3% after being quite weak in the past several weeks. Clearly, there's optimism in regards to the economic growth rate. We saw the numbers of the domestic consumption, the retail sales numbers jumping a record high pace. This is clearly indication that the U.S. economy is recovering. And because of the better economic growth than expected, the overall the earnings growth for the U.S. companies are expected to show bigger jump. And on top of that, we saw quite stable interest rate environment of below 1.6% of the 10-year government bond rate for U.S. So ample liquidity, stable interest rate, and economic recovery at a reasonable pace, all that resulting into further record high level of the indexes for the U.S. We think that the interest rate environment should remain to be where it is. We do expect a gradual rise rather than an aggressive rise of interest rate, and therefore the earnings growth rate will be much bigger implication and impact than the interest rate environment. And U.S. market should lead, particularly for NASDAQ, to show earnings growth rate that is topping global economy.
Right, so a bullish market ahead in the U.S. Taking a cue from an overnight rally on Wall Street, South Korean shares opened higher on this Friday and even crossed the 3,200 mark in the first 15 minutes of trading. But then it closed a little change from yesterday at just a touch below 3,200. What are you reading into this South Korean market?
Right. South Korean market since the beginning of the year had been continued to be the leading market versus any other countries in the world. We saw from the bottom of the COVID-19 cases of last March to the peak of 127% rise year on year from the bottom to the top, and then saw some correction about 10%, but once again it's rising again. The main reason for such strong numbers that we are seeing in the last about a year is because Korea is expected to show stronger growth rate in terms of the earnings. Last year, it grew by 2 digits. This year, again, is expected to grow by about 30% plus of earnings. And then next year, Kospi is expected to show another 20% of earnings growth rate. All these strong earnings growth rate is coming from Korea's skewedness towards the export-related sectors, particularly semiconductor business, the electric cars and automobiles, and other chemicals-related materials, and also some of these export related to the shippings and other economic growth areas are showing recoveries. So clearly, we are seeing one of the better years for the economic growth rate and earnings growth rate of Korea, and this will result into probably further rise in the future. We are expecting the Kospi to reach well above 3,500 territories over the next year or so.
3,500. Daniel Yu of Yuanta Securities, many thanks for your insights and expertise. We appreciate it.
Thank you very much.
South Korea reported just under 700 new cases of COVID-19 on this Friday. As new daily infections remain stubbornly high, the government has deployed special inspection teams nationwide to check prevention measures are being adhered to at facilities deemed high risk. Our Cho Eun-jung with details.
South Korea reported 673 new COVID-19 cases on Friday, slightly below the 700 mark for the second day in a row. All but 21 were locally transmitted. The total caseload now stands at more than 112,000. The majority of cases were located in the Greater Seoul area, which is more than 67%. However, due to sporadic cluster infections across the country, the nation saw new cases in all 17 provinces and cities. In Ulsan, one teacher tested positive, and after conducting a COVID-19 test in all teachers and students, all total of 6 cases were reported afterward. Also in Gyeonggi province, 6 new cases were reported related to teachers and students at a local kindergarten. Cluster infection also continued at local churches, 24 cases in total. In order to curb the hidden spread, health authorities are deploying on-field team members to inspect COVID-19 prevention measures. The COVID-19 inspection team has already started inspections, checking high-risk facilities that could violating prevention measures. The 7 different inspection teams that are partnered with police and local governments will gradually complete inspection on 9 different facilities, such as schools and restaurants, by June. Cho Eun-jung, Arirang News.
And South Korea has extended its worldwide travel advisory by another month due to COVID-19 concerns. The Foreign Ministry says the advisory will stay in place until at least May 16th. It says people should avoid traveling overseas and be extra careful if they are abroad already. The advisory has been constantly extended since it was first imposed in March last year, and it could be extended again next month if the pandemic is not under control by then. And that brings us to the end of this newscast. Thank you for watching, but do stay tuned. I'll be back with more of the day's latest at 7 p.m. Korea time. Take care.